Good afternoon, everyone. We're just going to give everyone a couple more minutes to join us and get in. Colin, we'll just give it about another minute and then I'll let you take it from there.
Sounds good. Afternoon, everybody.
Good afternoon.
All right. Can you see the big fresh screen there?
Yep.
Okay. All right, I'm gonna grab some water and we will get going, guys. Okay. Let's do this. Thank you, everybody, for being here. Happy Wednesday to you all. This will be a little bit shorter than last week. Last week, we went a good 45, 50 minutes on credit issues, credit challenges, what lenders look for when they're analyzing credit reports. That was very, very good. This is an interesting space as well that I thought would be a good topic for these regular Wednesday trainings in terms of non-US citizen buyers. So let's get started. And before we start, anybody who wants to jump in and interrupt me or ask questions. Dustin, you were asking a lot of awesome questions last week, so good to see you back here. Feel free. This is supposed to be an interactive thing. It's not just me talking at you. So with that said, let's get into it. There is a lot of confusion and misinformation regarding this topic, and we always want to clear up that confusion by details, information, things that will help you assist your non-US citizen home buyers. So it's our hope today you're going to get a lot of answers to questions or concerns that you have or may have had or may have in the future when it comes to non-US citizen buyers. So when you analyze why this is such an issue with lenders, part of the problem is that the agencies that create the underwriting guidelines, Fannie Mae, Freddie Mac, HUD, FHA, USDA, VA, they're not very specific. And in fact, they've left a lot of interpretation to the lenders to decide for themselves on what is actually a gray area versus black and white. And because lenders are on the hook for something that goes wrong with the loan in the secondary market, lenders often tend to be more conservative when they don't have strong guidance, black and white correspondence, or knowledge in this area of the business. It's also why you'll see guidelines that vary significantly between lenders. You have one head of underwriting at one major lender who is making a relatively impactful decision about how we're going to deal with issue X. In this case, let's say I-10 loans, right? So that has a trickle-down effect for that particular lender versus, let's say us, for example, where, okay, we know that this lender has this particular guidance on this issue, but we understand this lender is a little bit more open to interpretation in this gray area, okay? So to be quite honest, internally, lender policymakers are really confused about how the immigration system works, how to properly document the status of a non-US citizen, and the time frame that a person is permitted to stay in the United States. What makes this worse is that the media loves to sensationalize immigration issues. Immigration issues have become increasingly politicized over the past 15 years, and this makes lenders question things like, okay, what's going to happen if the borrower is no longer allowed to stay in the U.S.? Will they pay their mortgage if they're no longer allowed to live in the U.S.? Or will the lender have to come out and foreclose on that property? Is it possible for the client to be deported? But in reality, this is sensationalism that is centered around illegal immigration, okay, not legal immigration. So it's crucial to separate the two. And as lenders, we work with clients who can legally live and work, I'll say that again, legally live and work in the US. And again, this is mandated not by us, by agencies that set the underwriting guidelines. All right, so the first step in clearing up this confusion is understanding the terminology and using the terminology correctly. And this is followed by step 2, which is to understand how the immigration process works. Now, it's been my experience that when these are a bit clearer, it helps to eliminate a lot of the confusion by this topic. So let's get into it. A permanent resident, sometimes it's called permanent resident alien, but I think that has become a little bit non-PC. And please, if there's something in these slides that is not exactly politically correct, my apologies. I know I try and use the undocumented being the appropriate terminology, but permanent resident is kind of the term now that I think is appropriate. So a permanent resident is someone that has been granted the right to live and work in the U.S. permanently. Okay, this means the U.S. State Department gave them immigrant status, which means they can stay here permanently, right? Now, generally, those granted immigration or permanent status work their way through the immigration system to eventually become naturalized or a U.S. citizen in time. Now, for this status, I want to focus on the word permanent. Now, unless they create some kind of criminal action, the person with green card holder status as a permanent resident may stay in the U.S. permanently. Now, I say that with a grain of salt because green cards technically do have expiration dates. But again, the renewal of the green card process is something that we don't necessarily need to get into here. Once you're a permanent resident, it's pretty challenging to have that green card revoked. So permanent resident, green card, you have the right to live and work permanently in the United States, okay? The non-permanent resident has been granted status to live in the US, but on a non-permanent basis. Now, depending on the type of visa this person holds, they may have the right to work. If they do, the lender will request an EAD, which is an employment authorization document. This is either an actual card, I've seen these EAD cards, or usually this right to work is based on a visa. So, for example, someone has an H-1 visa, right? That's a skilled worker. And you will see a lot of those in technology companies, IT companies, things like that. The non-permanent resident has the right to work that's built into the visa. Whereas another type of visa holder may need to get an actual employment authorization document. Now, there's a chart that tells us what kind of visa types require an actual card and which ones have the right to work built into the visa, so we know what documentation we're asking. In reality, there are about a dozen of these, and they're all alphanumerical, H1, H1B, all these different codes. And then we essentially have a flow chart that will say, okay, this type of visa will allow conventional but not FHA, or vice versa, for example. So we don't need to get into those dozen different types of visas, but when you're talking about a non-permanent resident, that's where employment authorization documentation is required. Okay, and then the next type of immigrant that we see here in the United States, asylee or refugee, right? This is a status you hear most about in the news media. This means someone enters the country pleading harm or danger in their country of origin, right? I mean, this was a popular topic with Afghan refugees and some other trouble spots around the globe. If a hearing's granted and the court says, okay, then a person with the status has the right to live and work here starting the day they've given the status. Okay, so once they've been in the country for a year as an asylee or refugee, then they can actually apply for a green card after 1 year. And that would, of course, make them a permanent resident of the US. Now, it's an important note to consider that this status will still require lenders to seek a viable employment history. Okay, so just because the person's permitted to work the time that they're granted this status, it doesn't necessarily mean that they're established enough from a credit perspective, which is one part of the puzzle, right? But also from a work perspective to get a mortgage. Matter of fact, it was a PhD agent that had a father-daughter working at Amazon, and they had entered the country and they only had about 4 months working. So they had an established credit history. They had, 3.5% down, let's say, for FHA. But the problem is with less than 6 months, and some lenders will say less than a year, some less than 2 years of that established work history, it's not like college, right? So you think about college and people will say, all right, I've entered the workforce. Now I'm going to work for 2 years. And I'm gonna, after that 2-year work history, bam, I'm gonna get a mortgage. I'm gonna buy a house. Well, in reality, the 2-year work history for the college educated person, the transcripts, I mean, that is like they were in college, right? So many of you may know this, but all you do is go back and look at school transcripts and boom, you have a full-time job. Day one, you're eligible for a mortgage. It's not like you have to wait. In this case, it's a little bit more difficult to prove that, right? So depending on the program, we may need to establish that 1 year, for example, of verifiable income, like another borrower that does not have the history of higher education. So those being the 3 major categories that non-US citizens fall into. Any questions on that terminology? Okay. So let's talk a couple more terms. Naturalization, that's pretty simple. You'll see if you've ever been to a naturalization ceremony, they're really, really cool. I remember I went to one on the 4th of July in downtown Minneapolis in 2011, 2012. Very, very cool. a lot of emotions. So naturalization is when someone becomes a naturalized citizen of the United States. Foreign national, you'll hear that phrase a lot. That simply means the person's not a citizen of the country that they're living in. So if I lived in France, I'd be a foreign national in France. Someone from France comes here, they're a foreign national in the United States. Temporary protected status, that is refuge given in the US for a period of time. Note the word temporary. Again, this might occur when there's strife in another country and people of that country are offered temporary protected status. When that strife is over, the person typically returns to that country unless they've been given another type of status. And then, of course, the really hot topic is the DACAs, right? Dreamers, C-33 status has been in the news a lot. Congress still trying to resolve this issue. I'm going to talk a little bit about Dreamers later, but basically this stands for Deferred Action for Childhood Arrivals. This is given to those brought here as children illegally, but have lived here most of their lives and know no other country. This is a fun one here. So this is a graphic that I like to use because it visualizes the immigration process. I won't go through the entire graphic, but this can assist you if you want to learn a little bit more about this in what it takes to be a U.S. citizen and, you know, kind of the different hoops that are jumped through when that happens. But I just want to point out a few items that's on this chart. First, again, there are 3 ways to enter the U.S. legally outside of asylee, refugee, or protected status. This first blue bar is related to being a U.S. citizen, right? So you might notice that family members are allowed to immigrate to the United States, and that's a pretty expansive leniency that is granted there. Secondly, a lawful permanent resident, right? So it's green for a reason. You talk about permanent residents, green card holders, right? And then the third way is a little bit of a unique one in that you can be talented in a specific area, right? If you think about my son, 6 years old, and for whatever reason, he really likes listening to Justin Bieber, which is it's something, you know, and Justin Bieber, of course, is a Canadian citizen, right? And he has an extended visa with the United States because he has a particular skill set, right? Now, you don't have to be Biebs to fall into this category, right? You can also be very talented in other areas, which is where you have the employer sponsoring the person for this type of visa. So this is very similar to the slide that we just showed, right? But this kind of puts it all out, and I'll make sure that this gets on the Slack channel as well if you want to look at this. But you know, this will give you kind of a more visual representation of the process to enter the United States, and then the sort of designations that come along with that. Any questions before we get into how lenders verify immigration statuses, which I think might be the most important part of this presentation? Okay, cool. Let's do it. All right, so lenders are going to first look to make sure that the applicant is legally present in the country. If you think about the automated underwriting systems that all lenders really use to determine the loan's eligibility for Fannie Mae, Freddie Mac, or for guaranteed loans like FHA, USDA, and VA, it will always call for us to verify, is the applicant legally in the United States? Okay, it's a basic requirement of all agencies. The second thing that lenders are going to look for is a social security number, right? Now that means the applicant can legally work in the United States. So if you think about legally live and work in the United States, that's where you have the status and then the social security number, okay? Now, the following items really we look for in every client, right? We talked about employment history. Does the applicant have an employment history? If so, for how long? And then is it an eligible, of course, employment type, right? You know, people who are paid cash and cannot document income would not be able to demonstrate an eligible income type, whether they're a citizen or not, right? So there are still those same parameters that are necessary for qualifying these types of buyers. Let's talk about the idea of living and working in the United States. If we talk about I-10 loans, this is a common topic, and this is one we get asked about a lot. What's the difference between a social security number and an I-10? Okay. An I-10 is an individual tax identification number. It is simply a tax processing number that's issued to those who are not permitted by Department of Homeland Security, DHS, to work in the US, but they may need it for other purposes, right? So an example of those who may apply for an I-10 might be, let's say, an international student of someone who is the spouse of a visa holder, or they might be, the spouse of someone who is here legally and has a permanent resident card, for example. They may be allowed to reside in the United States, but they're not permitted under their visa type to work here. Okay, so let's just use this as an example. You have somebody that is a husband, wife, and let's say the husband works, but the husband does work that the husband is not a permanent resident, and the husband is not a non-permanent resident per se. They don't have a employment authorization document, and they don't have a social security number. Okay, so, but they do have an I-10 number, right? Let's say they're doing landscaping, right? They have an I-10 number that is that tax processing number, okay? But remember that I-10s have nothing to do with visa status. It's a common misperception that I-10 has to do with visa status. Typically, if you have someone that has an employment authorization document, a visa, for example, they're almost always going to have a social security number. That is very, very common, right? But, remember that social security numbers can only be issued to those who are permitted to work in the US. So social security numbers, of course, are given to US citizens, but also non-US citizens permitted to work in the United States. So I-10 loans become problematic because why don't you have a social security number, right? If you don't have a social security number as a borrower, it becomes challenging from the perspective of how are we really documenting that you are permitted to work in the US, okay? In fact, when you talk about I-10 loans, I wanted to pull this up real quick, and I guarantee you it's going to take me a moment to find it.
Jen, do you have a question?
Yeah, I do. I didn't want to interrupt though because it sounded important. What would be the difference of like why we would allow them to be here but not want them to work, especially if they want to work?
Say that again, Jen.
Or is
You
that
cut
just
out quite a bit.
another topic? Like for the ones that are for the residents that are allowed to be here but not allowed to work, like are there reasons behind why they say yes, you can be here and stay here, but you're not allowed to work? Or is that just a whole? I'm just curious why they wouldn't be allowed to work if they want to work.
It becomes an issue of
Taxes.
yeah, that's the primary focus. That's the primary focus. I mean, you'll see a lot of people that will have these I-10 numbers, and perhaps they if they had a social security number, it would be a different, obviously, categorization because of social security, right? So it's more of like an entitlement issue more than anything else. But
Gotcha.
yeah, you're right, Cassie. I mean, it's primarily a tax issue that you will see. I just wanted to pull
I'm
up
more
this.
curious why a lender would even give that loan? It seems like it would be a very high risk loan. Do they come with higher interest rates? And maybe you're getting to that.
Yeah, right. So this is agency guideline, right? So if you look at, and I'm trying to find my chart. Okay, here we go. So, really the delineation is, does the borrower have a social security number or an ITIN number? They have a social security number, yes. And then, do they have documentation to verify status? And that can be in a number of different things: green card, work visa, entry stamps, EAD, and then this I-551 stamps, which you rarely see, right? If they don't have this documentation, then really they're not eligible. And by eligible, I mean for delivery to Fannie Mae, Freddie Mac. So we're talking conventional loans here. But you look at how sharply this delineation is right off the bat. With ITIN loans, the answer is typically no. You will see ITIN lenders. We will do loans that are non-QM, Cassie, for example. And yeah, you're going to see a rate that's probably a point to a point and a half above what the standard is. So that risk is sort of built into that loan structure. Typically, they're going to be 10, 15, 20% down. So the lender gets a pound of flesh for the risk that they inherit. Does that make sense?
Yeah.
Okay, so let's see, where was I here? We just talked about this, right? So matter of fact, this actually comes from that specific chart. When you talk about standard types of documentation, work visa, that's a little bit loaded because again, you have about a dozen different visas that can come up, but these are typically the 5 different standard types of documentation that come up for borrowers that have social security numbers. And there's a good link here that we have in our resources where you can actually verify status in print off a copy of their status. And that's something that we will use when you have borrowers that are non-US citizens come across our desk. So really, once the lender's verified status, they're going to verify employment and credit history, just like any other type of borrower. First, we're going to make sure the employment history meets those standards, right? Then we move on to the credit history, right? Sometimes you might see non-US citizens that have less than established credit, right? And then, we're going to see if there's a score, or if there's not a score, you can still get these loans done, right? So even non-traditional credit, you have somebody with no FICO, for example, this can be done. It's just probably going to be, let's say 10% down FHA, okay? So you can compensate for non-traditional credit, for example, it's just generally going to be a little bit more down. So kind of in that vein, Cassie, when you think about, okay, can it be done? Yes, but you don't get all the bells and whistles of your standard 3.5% down, FHA deal, for example, right? I mean, yeah, you can do an I-10 loan, but you're going to need, let's say 15% down, right? So the one thing, let's see, and we're almost done here, but let's see, income continuity. So, typically when we call income continuity, it just means whether the income will continue, right? So if it doesn't continue, and again, you might have expiration dates on particular work visas. For example, you have a work visa, you have all this, but let's say your work visa is coming up to expire in 5 months, right? That becomes a bit of a problem. I've run into that before, where the employer has to essentially write a letter on company letterhead that they're going to seek renewal of the employee's visa, right? But that's something to consider as well, right? Another potential pitfall here, where when does that EAD document expire? When does that H-1 visa expire? Is it next month, or is it 2 years from now, right? And then I wanted to get into this, right? This is kind of, again, this hotter topic. I talked about how I would review DACA status in more detail. So you're talking Dreamers or those with C-33 status. It really all means the same thing, okay? This was created for children brought to the US illegally that have been here so long that this is the only country they know, right? Those with this status often are no longer children. There are about 800,000 between the ages of 18 and 36 in the United States. So this status has been back and forth, and was created for those who qualify to seek employment and protect them from documentation. We've done loans for people in this range. So it's not like because you have this status, it does not disqualify you. Matter of fact, this is actually one of the easier loans to do. And quite frankly, from a personal note, I think it makes most sense. Again, if you were here when you're 3 years old, you've grown up in this country. I mean, anyway, neither here nor there, but you have people that are of this status, engage a lender that, understands all of this and can take this loan either to Fannie or to FHA. So dreamers are good from a lending perspective. And then the last thing, and I'll open up for questions, VA is the easiest. If you have somebody that is a service member, if you served in the military, you're done. All VA requests is your DD-214 or your certificate of eligibility. So there is none of this hoop jumping with VA loans. So if you have somebody who's a veteran, for example, that, well, I'm not a US citizen, et cetera. Number one, they can apply for citizenship. And there's a fast track for military, but also VA loans, for the most part, VA should never have any significant concerns with non-US citizen issues. So that's kind of the scoop on non-US citizen. I know I threw a lot at you guys, and I didn't want to run too long. Any questions that you have on any of this information?
I don't have any questions, but I do just want to add for folks that don't know, this is aside from mortgage, but anybody, regardless of their status, can purchase a home in all cash. For those of you that don't know, I've had people like that. And that's why we have the FIRPTA indicators on paperwork when you're signing listing paperwork, and it's all part of the purchase agreement, et cetera. I know that's a little bit in a different direction of this topic, Colin, but since we're on all of this topic, I've had people call me and say, this person has all cash to buy a house. Can they? This is their, citizenship status, et cetera. And you can still purchase the home.
Cassie, could you give us a little bit of color on that? It might be more of a title. I don't mean to take you in that direction, but I mean, I remember a transaction 5 years ago with Leslie Mahowald, for example. It was a contingent deal where people buying their property, and there was a Turkish passport that was in there. And I think it was something where maybe the FIRPTA documentation was not filled out. But can you give us some color on that, just out of curiosity?
Well, I do feel like it would be a better topic for title to handle, just because I don't know everything. I just know I had people who weren't US citizens. I don't even know if they had the the IN number, any of that. But they had all cash and they closed on a home in like 8 days. But their biggest obstacle or struggle is going to be when they go to sell that home, because the additional taxes that FIRPTA requires to be withheld. So you're right. I don't want to act like I'm an expert on that. I've been through one, and title handled everything. I was just personally at the time in my career really surprised that citizenship doesn't seem to matter on home ownership if you're cash.
Yeah.
So, I mean, if people are interested in that, we could definitely get a title person in to talk more about it, but.
Cool. Okay. Yeah. I actually had forgotten that it's like an additional 10% tax withholding. So now that you say that, it starts to ring a bell, but yeah, really good knowledge and good point that cash is king in a number of these different areas, especially when you come to these immigration issues. So.
And you handle and service all these loans as well, right? You can do the, why do I keep struggling with the ITIN? Because why have I heard ITEIN before? Do people throw an E in there?
I mean, as with any acronym, there will often be, you know, you'll have letters thrown in there, but yeah, I think because it sounds like I-10,
Maybe.
that might be part of it, but yeah, it's individual tax identification number, ITIN. So it's kind
Okay.
of pronounced I-10. Yeah. And I mean, that is something that we do handle, but you know, typically 10% down or more. And then, you know, again, you kind of get in this category of you've got to have certain credit score requirements versus standard FHA. And typically you're going to have, you know, a rate that's going to be higher than market, you know, not gouged, but higher.
And do those loans take any longer to close than your average loan? Does outside of some of these things that you need to verify as a lender, none of the rest of the lending process changes in terms of like appraisal, closing, timed underwriting, any of that?
Yeah, that's a really good point. And I think that's something the presentation doesn't necessarily make note of, which is, you know, the most common of these areas is going to be your green card holder, your permanent resident, right? So, for example, as part of our application process, we have somebody that applies. I'm sure you've all seen the sent clients the application link. They will apply, and then they'll be asked what their citizenship status is. And that'll be U.S. citizen, permanent resident, non-permanent resident, right? And they check one of those boxes. For example, if they check permanent resident, then our technology will say, we need your green card, right? As part of the pre-approval process. So it's sort of one of those logical if-then technologies that the mortgage industry as a whole has gotten better at. But yeah, I mean, by and large, the process is unchanged. So it's not like, okay, I have somebody who's a non-permanent resident. Should I schedule this for 40, 45 days? Not usually, not usually. The only kind of wrinkle in that would be if you have a employment authorization document that might be up to expire, that can take some time, right? And then any good lender should be engaging the client on, you know, for example, if they're applying for a green card, you know, that can affect the timeline, for example, if that green card's necessary as part of the approval process. But I think other than those kind of more unique situations, I think you're right, Cassie. I mean, pretty standard underwrite, appraisal, you know, title, closing, not that unique.
Perfect. Anybody else have any other questions for Colin on this?
Oh, Jess, I just saw your chat, Beebs. Love it. Yes. The problem is finding Bieber songs that are clean. You know, that becomes kind of the biggest issue. Because you don't want a 6-year-old, you know, using particular words, but yeah. I think the big thing, guys, too, if you take anything away from this, it's nothing to be, quote, afraid of. Maybe that's not even the right word, but, you know, I mean, I think that the media sensationalism is, it has nothing to do with you and your ability to help a client, right? So if you can jump right into it with a lender who understands these guidelines and can work with the client, sometimes you'll get people, too, that are afraid of, I don't want to talk to a bank and, you know, who knows what they're going to do with it. You know, that we had nothing to do with that. So assure them that that they can be in good hands and they should take action if they want to buy a home. Thank you, everybody. Cassie, thank you for running this as always. I sincerely appreciate it.
Have a great day, everyone.
Take care, guys.
Bye.